Hello, everyone. Hopefully, everyone is doing well today. Money. Everyone needs money. Everyone wants money. Everyone's desire is for money and wondering about money for loans. And so, when thinking about the real estate market, you think lenders. And I thought I'd call upon one of my favorite people, Leslie Wish, and she is a wonderful lender in the area with McLean Mortgage. So I'm going to let Leslie introduce herself and tell people what you do.
Great. Thanks, Dan. Yes, as Dan said, my name is Leslie Wish. I'm with McLean Mortgage Corporation. We are a local lender here in the DC metro area. We are the fourth largest lender in the area. And I've been a loan officer for over 30 years, so happy to help.
Awesome. So COVID-19, it's impacted pretty much everybody, like around the world. And so I'd love to hear from your perspective how it's impacted you and your business.
Yes, so starting in the beginning of the year, mortgage originations were off to a great start. We've had a good few years, and everything was great until the first week in March. And then when this whole COVID thing hit and they started shutting everything down, it just threw the mortgage world into turmoil. A lot of problems were happening behind the scenes that consumers couldn't see. Interest rates had dropped to some of the historic lows at the time, but certain segments of the market seized up. So for instance, the jumbo loan market, loan amounts above $765,600. There's really no market for those right now. There are very few lenders still offering product for that, but for the most part, most lenders don't have access to that right now. We do expect that to change in the future. We just don't know when that will happen. So that is one of the fallout, one of the problems that happened as a result of COVID. A lot of other things to consider as a result of COVID. Forbearances, kind of a big word right now. The government has given consumers the ability to go into forbearance, which means they are not required to make their mortgage payment for 3 months or 6 months, depending on your loan servicer. That is something that's really helpful to people that have lost jobs and really cannot make their mortgage payment. But unlike back in 2007 and 2008, where you had to prove to your loan servicer that you had a hardship, this time around, they're not requiring that. They just wanted to get the program out and on the table as quickly as possible and get people the help that they needed. So that part's good. But what we're telling everybody is if you don't need to go into forbearance, don't do it, because there might be some unintended consequences down the road. You will have to pay that money back at some point. It's unclear right now as to which loan servicers, how they're going to make their people pay it back, if it's going to be right away, if it's going to be spread out over time or tacked on to the end of the loan. But the important thing to know is you're not supposed to be reported by the loan servicer as late to the credit bureaus. But, you know, with the credit bureaus and the credit industry the way it is, I would suspect at some point in the future, we're going to see that maybe there were some errors made and people will have been reported in some cases. And that's just going to be a mess for a consumer to try and clean that up behind the scenes. So just be careful with that.
That's good advice. I hear the word forbearance a ton, and so that's a great explanation of when you should and when you shouldn't consider it. Interest rates. So people look in the Washington Post, they read online, they see numbers like 3%, 3.25%. I think in the last day or two, it's gone up a little bit than, compared to last week or, recent times. But talk to us a little bit about the percentages as far as like, is now a good time to consider doing refinancing? What are the factors, they should consider when doing a refinance? Because I think people's rates obviously were higher than they were now for most people, 4%, 5%, and they see numbers like 3.25. Is it a good time to consider that? What are other things they should consider?
Fantastic time to consider refinancing and buying because rates are at historic lows again. And from week to week, day to day, the rates kind of bump up and down a little bit. So one week they might be up a bit, one week down, but in the low 3% is a good range for the majority of where people's loans are going to be, their loan amounts. If you're considering refinancing, if you're going to be in the house for at least another 2 to 3 years, most likely you're going to be in a situation where it's going to be important to explore whether it's a good time to refinance. You might want to shorten the term of your loan. So you might be in a 30-year right now, but you're saying, hey, rates are so great, I want to pay my loan off in 25, 20, 15, or even 10 years. So we can help with that as well. If you've got PMI that you're paying on your loan right now, and we've seen it, home prices go up in the last several years, you might have enough equity and through refinance be able to get out of paying that PMI. So there's, and also taking cash out of the home. Again, there's equity in a lot of people's homes now again. So if you're thinking of renovations and you need some cash out, you may want to consider a cash out refinance. So all of those options would be available. It's a great time to refinance.
That's great advice. What about people that get scared off because they're like, I have a lot of credit card debt. I have debt for other reasons. Like, what do you say to people who are scared to do those things because of the debt?
I would say, explore that. Explore that with a loan officer who's experienced in being able to kind of help you through that and determine if that is in fact something that would hold you back. Sometimes it's a good idea. It really depends, but sometimes, there may be a way to do a debt consolidation through a refinance, which might put somebody in a much better financial position. But if you're just scared because you think I have too much debt and I can't do it, sometimes you'll be pleasantly surprised that it might not impact you that way. So it's good to explore that and ask the questions.
Communication's the key, right?
It is.
How about the no-nos? What do people not do? Can you go buy a new Lexus like when you're trying to apply for a loan? What are things that you would advise people absolutely not do?
That's a good point. So once you decide that you want to be serious about a real estate transaction, whether it's a new purchase or a refinance, what you just said is important. Don't just go out and buy a new car if you are definitely wanting to complete the mortgage loan process. So check it out with your lender. I mean, it might not be a problem at all, but just make sure you're talking with the loan officer and saying, hey, this is my plan. Just be as transparent and as communicative as possible right up front. And that lender can help you come up with a strategy and let you know what would be a good idea and what would not be a good idea. As far as other no-nos, you don't want to take cash that you might have saved in your home and dump it into your bank account right before you apply for a loan or during the loan process. Cash is very hard to validate, document where it's coming from and that it's coming from a legitimate source. So in some cases that could actually hurt you and make it so that you might not be able to get a loan. So don't do that. So yeah, those are all good reasons, things not to do. Oh, and the other thing I always like to tell people is don't just assume that, hey, I'm going to pay off all my debt and then go talk to the lender because I'll look a lot better. In a lot of cases, you could actually end up hurting yourself and your credit score by paying off all your debt. So again, a lender who's experienced can help coach you through that.
That's great advice. I think a lot of people probably think I need to pay everything off before I go talk to you.
Not the case.
Not the case.
We actually prefer you don't do that.
Don't pay off anything. No, those are all excellent points. Well, listen, thank you for your time today, Leslie. Is there anything else that you'd like to add?
Yes. So Dan, you and I have known each other for a long time, and you're one of the most hardworking, detail-oriented people I know. And I know with your real estate business that you go to the ends of the earth to make sure that people's interests are protected during the real estate transaction. And I know that anybody that would work with you, Dan, would be in great hands. So good luck. Thanks for having me.
Well, thank you. I appreciate the kind words. Thank you again for joining me, and you have a great day.
Thank you.